Hello, I'm James Brackley, the Socialist Accountant, and welcome to this short campaign video on providing Congress and the NEC with expert advice on the financial position of the Union based on a proper analysis of budget variances, membership data, and spending commitments. So I'm going to talk a little bit in this video about what financial position we're in as a union, how we fund national and local disputes, and how I think this information really could be much better communicated through the democratic structures of the union, particularly Congress and the NEC. I'm going to talk mostly in this video about the large national disputes that we find ourselves in, but it's really important to also highlight that it's crucial to fund local disputes. We've got some fantastic FE disputes at the moment. We've got Darlington College and Finesse College out just last week as I record this video. We've got University of Sheffield International College, Truro, Penrith, Barnet and Southgate College, and other colleges in the FE sector facing real-term pay cuts and offers as low as 0%, who are delivering wins for their members right now. So I'll start with one of the big funding decisions we face as a union, which is how we reimburse members who are facing strike pay deductions. And having just highlighted local disputes, I think it is crucial that we fund both national and local disputes together, that we're not playing one sector off against another in terms of what we fund and what we can't fund. As we'll see in this video, in terms of the financial sustainability of the union, it is very much the large national disputes that overwhelmingly impact the national finances of the union. We absolutely can afford to fund local disputes to the same sort of level. So we've just taken 3 days of strike action in 22-23. We're anticipating more strike action in the spring term, possibly a marking and assessment boycott, and some members facing deductions for ACE action short of strike action as well. So let's start by looking back at what we funded in previous years. In 2021-22, we funded 11 days of action. Out of the total action that we took last year, only 11 days were funded, and that was at £50 per day if you earned more than £30,000 a year, or up to £75 a day if you earned less than £30,000 a year. That meant for most members, the strike pay you could claim was £550 or £825 for lower paid members. Going back a little further, 2 years ago to the 1920 dispute, you might remember that was the really big Four Fights dispute and USS dispute, where we took 8 days of action in the autumn term, followed by a further 14 days of action in the spring. And that dispute kind of came to a close just as the pandemic broke in March of 2020. Now, that dispute, we funded 16 days of action, and we capped the claims at £800 for most members and £1,100 for lower paid members. So I'm going to use that dispute, the 1920 dispute, to do some analysis of what we can afford this year. And the reason for that is I'm using only publicly available information in this video, and we have online the budgets and the national accounts of the union for 1920 and for 2021, but not yet 21-22. So that said, how many members in 1920 did we call out in the national HE dispute? Well, we called out 53,000 members on a disaggregated basis. So that's if you add up all of the membership of all of the branches who had a mandate in 1920 and took strike action. There was very little, almost no FE action or action in other sectors that was funded that year as well. So it was exclusively HE that the strike fund was covering in 1920. If we look at the HE dispute this year in 22-23, we've got an aggregated mandate, and we've got approximately 72,000 members now with a mandate to take action. So if we look at how much it cost us in 1920, we can have some idea of how much it might cost us in 22-23. So the full claims from the strike fund that year were 2,891,000 for those 53,000 members we called on to take action. So if we scale that up to the 72,000 members we're calling out this time and divide by the number of days members were taking action, that comes to approximately £250,000 per day, or £242,000 per day to be precise. So funding a similar scheme to what we had in 1920, i.e. reimbursing members for 16 days at £50 a day, would cost somewhere in the region of £3.8 million. Whereas funding something more like what we had last year in 21-22 would cost something in the region of £2.65 million. Looking back at that 1920 dispute, we also raised a fantastic £709,000 in donations that year, so that if you also include the cost of actually balloting our members, the net cost of taking action in 1920 was £2.368 million. So thus the net cost of taking action in 22-23 is going to be dependent on how much money we can fundraise. So having a credible national fundraising drive is absolutely crucial to the next steps in this dispute that we're in. And you'll see there is a feeling amongst activists that we must be doing more on this. You can see Congress motions 14 and L1 from Congress 2022 that were both carried, calling on the union to do more around national fundraising. So that covers roughly how much the strike action costs if we funded it on a similar basis to what we funded in prior years. Well, what's the union surpluses historically, and what are they looking like for 22-23 based on our budgets that have been put out there? Well, the net operating cash surpluses, the actual figures for the last 10 years, has averaged out at 3.2 million surplus per year, and the average operating surplus on an accruals basis has averaged 3.5 million surplus per year. So we can note that these figures already exceed any amount that we've ever spent on any national dispute, the biggest to date being 1920, which, as I say, net cost was about £2.3 million. And these surpluses already include the cost of some quite significant action in that decade, notably the big national disputes in 2018 around the USS, and then 2019-20 around the USS and four fights. So you can see the surpluses that we've generated, the actuals there in blue against the budgeted figures, and how they've accumulated over time in the last decade. And so what that tells us is that we have what we call a structural surplus within the union in and around £3 million per year, or in excess of £3 million per year, and a significant cash reserve that's been built up over that time as well. However, we also need to consider what are the possible new costs for 22-23 before we jump in and make any kind of funding decision this year. Inflation, as we know, has risen from where it was when the budget for 22-23 was passed. There's also been a settlement with the UCU staff through Unite UCU, who got a 7.8% pay settlement, which was in excess of the 5.5%, which was within the budget that we passed at Congress. So if we take that into account, again, just giving rough figures, the additional pay settlements, so if you just by taking the additional percentage on top of the staff costs of the union, we're looking at approximately £285,000. And then similarly, if we add in the additional inflation between March and September and assume that that's not been budgeted for either, that adds another £305,000 to the costs this year that we would expect. So we can't be too precise here, but it seems unlikely that these unbudgeted costs would wipe out this large historical structural surplus for 22-23 that we have, especially given the reported increase in membership. We've heard from the General Secretary several times that membership has increased. We would expect that to have a corresponding increase in our subscription income. So putting all of this information together, the average positive budget variation over the last decade has been £3.197 million per year. That is, our surplus has been that much bigger than what we budgeted for. Add that on to the budget surplus for 22-23 of £416,000, we would still be looking at an anticipated budget surplus of 22-23 of circa £3 million, maybe a little bit less, £2.9 million, even if we add in these additional unbudgeted costs. So these are only rough figures, but it gives you an indication of the solid surplus we would ordinarily expect in 22-23, were it not for the large HE dispute that we find ourselves in. So based on that, what can we afford? Well, I estimated if we scale up the 1920 figures to the aggregated dispute, the number of members that we're calling out, it would cost us about £250,000 a day, at £50 a day for most members. We would therefore expect 13 to 14 days of that action to be funded purely from the surplus we would have generated in 22-23. and even accounting for all 17 FE colleges who have a mandate for strike action this year, not all of them have taken that strike action. That would only add about up to a maximum possible 4% on the total cost of the strike fund. So that's in terms of surplus. The other question that I commonly get when NEC members come to ask me about this sort of stuff is, can we spend our reserves? And the short answer to that is yes, subject to the normal approval processes on expenditure and transfers between reserves. We can hypothecate funds into the strike fund from the accumulated fund, for example. And the cash balance of the union as of August 2021 sat at £30,986,000. And the total net assets or total reserves of the union at that point in time were £38.7 million. So again, if you're looking at £250,000 a day for an aggregated dispute, you can potentially fund that for an awfully long time out of the pre-existing reserves of the union. Now, I'm not necessarily advocating for that, and it's likely you would want to keep a minimum level of reserves. But just to give you an indicator of the size of the figures that we're talking about. So what should we do? I've worked with NEC members very, very recently in December 2022 to bring a motion to NEC to increase the strike fund. I think we could go a little bit further than the £50 a day, which is now worth substantially less than it was in 2019, 3 years ago. I think we could be extending that to £55 or £60 quite easily and still funding quite an extended dispute if we need to. And certainly if I was treasurer, I'd be wanting to consult members, consult branches, and have a well-informed conversation with the national executive about this issue and how we can extend that fund for our members. So the second thing I wanted to talk about in this video on providing expert financial advice for Congress and the NEC is, why is it that our budget has been so wrong in previous years? I described a budget variance on average of £3.2 million over the last decade. Well, how is it that that's happened? So let's take a little bit of a closer look at the UCU budget very briefly. The budget is driven by top line income and particularly subscription income from our members. In 2018, the underlying assumptions driving the budget for subscription income was reassessed, and it's increased by a set amount each year. As you can see here, the actual subscription income has increased much more quickly than that, even allowing for a drop in 2021 due to members leaving the union because of COVID redundancies. But even accounting for that, if you look at the figure for 2022, we would have to drop our membership income again from 2021 in order to match the budget for 2022. And we're being told that the opposite is happening. Membership numbers are actually increasing. The other side of this is our expenditure, and we have also consistently overestimated a number of items of expenditure in the UCU budget as it gets presented to Congress consistently year on year. Perhaps most notably here, we consistently underspend against the staff budget, which is one of the biggest items in the UCU accounts. And you can see there in 2021, there was a huge underspend against budget, which was in part driven the increased settlement that Unite UCU were able to win for their members when they were asking for a cost of living pay rise this year. Similarly, there are a number of other categories of expenditure that appear to be overstated. The largest such example is the capital expenditure budget, which ordinarily would only be applied to capital purchases planned well in advance. But we seem to see round sum amounts posted to the capital budget year on year that are not linked to any actual capital projects. For instance, from 2020 through to 2023, the amount posted to capital expenditure has been precisely £475,000, which again, we haven't spent that money anywhere near that amount in those years. And that also in turn inflates the depreciation expense in the accounts. If you'd like to take a closer look, you can see also professional fees, equality and participation, taxation expense, campaigns and policy expenditure as just some of the examples of some of the budget lines that we underspend against year in, year out. In addition to that, there's how we've budgeted for things that have been directly affected by the pandemic and particularly the move to online meetings. So we've had an online Congress in 2020 and 2021 and 2022. We're expected to go back to in-person Congress in 2023. But that's still 3 years of online congresses where actually in the budget, we've budgeted for a full in-person Congress in each of those years. So you can see there that's saving us in and of itself about £500,000 a year. Similarly, the expenses of the NEC, it can be very costly to book travel expenses for all 50 or 60 NEC members to travel to London. Again, we've budgeted for full in-person NEC for the last 3 years. And you can see there in 21 and 2022, because of online meetings, those costs have been significantly lower. So as your National Treasurer, I would look into these budget variances carefully. I'd give proper and genuine financial advice on the actual position that we find ourselves in as a union, so that we can make well-informed decisions collectively and democratically about what we do strategically as a union. I don't think that's really happening at the moment. I think the level of discussion and explanation happening on NEC in relation to the finances is very, very limited. And similarly, there's almost no discussion or scrutiny of any kind at Congress. So I'll finish this video with one observation that I made looking at the accounts and the budgets of UCU, which I would like to see more transparency on, and I would like to very much get to the bottom of, is something called the NAT Fee pension scheme. So this is a historic pension scheme that actually closed to new members in 2006. So it's for staff of the union who were previously members of the NAT Fee union prior to the merger with the AUT. And that scheme was running a deficit, and just like the USS and other schemes, it was revalued in April of 2020, and it actually posted something like an £8 million deficit on the back of the 2020 valuation. And if you look at the accounts of the union in the 2 or 3 years since then, almost all of that deficit has gone as we've posted what we call actuarial gains. So essentially, as the conditions of the economy have improved, also that scheme is in any case winding down. That deficit has naturally almost disappeared to the point that we had less than £1 million deficit as at August 2021. And you can see here from this graph, the grey line is the NAT Fee recovery costs. So these are similar to the USS pension provision costs that you see in the annual accounts of universities, if that's something you're familiar with. And this is the statutory cost, if you like, of covering those future deficits, and then you recognise the present value of those future losses in the accounts. So the grey line is the statutory scheme to fund the deficit, the recovery costs. In addition to and on top of that scheme, we've also entered into what's called a side agreement with the NAT Fee trustees. And that side agreement kicks in as of the summer of 2021. So we're going to be making these additional payments on top of the statutory recovery plan to the NAT Fee trustees from the union's finances. And as I say, two things that strike me as odd about this that I'd like to understand is, firstly, the scale of that scheme is very sizable. The total cash that we'll be putting into NAT Fee as part of this side agreement, which is separate to and on top of the statutory recovery plan, comes to £3.4 million, which is well in excess of the deficit in the scheme, which was less than £1 million at August 2021. Perhaps almost more concerningly than that is the conditions upon which we make these payments out of the union. They are conditional on generating an accounting surplus. So if we generate a surplus of more than £2.5 million in the accounts, we make these conditional payments to NAT Fee of £800,000 per year on top of a lump sum payment that we've already committed to. And if you add all of that together, it comes to the £3.4 million. So again, I'm not implying anything untoward here whatsoever. It's just interesting that that 3.4 million is more than we've ever spent in a national dispute. And we've just spent some time breaking down how we fund the strike fund payments, for example. And that is regularly a heated topic of debate at NEC. You know, what can we afford? What can we not afford in terms of the strike fund payments to our members? And yet, when I've asked about these payments from the union to NAT Fee, I'm told by NEC members that they're not aware of it. They're not aware of it ever having been discussed. And this side agreement certainly wasn't presented to Congress back in May of 2022, when certainly I think it should have been, when you're talking about making this level of discretionary payment of our members' monies out of the union. So, as I say, I've not used anything here that isn't already public information. At NEC level, we do also get quarterly management accounts, updates on membership numbers and funding agreements and things like that, sorry, donations. And I think that that information needs to be well analysed and well presented to the democratic structures of our union. So if you'd like to follow my campaign, I'm James Brackley. I'm running for Treasurer of UCU, and you can follow my campaign at thesocialistaccountant.co.uk and at BrackleyJ on Twitter.